Hello, Adil Fazal here, analyst on behalf of CFDs.com, a spread betting and CFD provider. Certainly visit their website to find out more. Also, you can actually sign up with regards to a demo account and a live account, so certainly be sure to check them out in terms of their brokerage abilities and obviously trading abilities as well. Okay, so the free products and services are certainly available as well at cfds.education. Certainly visit the website there, and certainly find out more. Okay, this is a analysis, or this is a video of the FTSE 100. I haven't done a video for almost 2 weeks now. That's mainly due to the technical problems I've been having with Windows 10. Unfortunately, it has been an absolute nightmare. Finally over it, and hopefully this video is coming through clear and hopefully allows me to elaborate and explain in detail. Okay, the summation. Let's start with fundamentals first of all. As we all know, Friday's US jobs report caused the US markets to obviously trade down, given the uncertainty going into the weekend. Also, given the fact that the wage growth was certainly there, although the jobs numbers didn't come in as expected, the unemployment rate certainly dropped. Therefore, an argument could be made, especially with regards to Mr. Lacker's comments, one of the Fed members basically stating that regardless of what the jobs report, the number comes out, regardless of whatever the number is, whether it's strong or weak, the argument for a rate hike is certainly on the table, and he would argue for it. So that certainly put a negative negative slant towards the market on a Friday. And obviously, as you can see, the US S&P 500 down 1.5%, the Dow down 272 points, and the Nasdaq was certainly obviously punctured as well. Now that fed through into the Asian session to a large extent, in the sense that obviously the Shanghai obviously closed down. Having said that, the Shanghai was up at one time throughout the session, and although the Nikkei certainly closed higher on the day regardless. So, I mean, if I just bring up a chart of the Shanghai, hopefully it shows me an intraday. And you can see from the intraday, let's just have a look at this, a 10-minute chart. You can see the Shanghai was at 3190, so it fell 110 points towards the close. So the uncertainty there, even though one of the central bankers there did state that the market had potentially bottomed, obviously that they didn't pay heed to that at all, and certainly decided to take their own course of action. Interesting. Okay, so the Asian markets obviously down, the Shanghai down minus 2.5%. The Shanghai really does dictate the markets at present in terms of its market movements. Okay, the FTSE 100, that's what we're discussing today. That certainly shrugged off the weaker Shanghai news, certainly gapped higher quite impressively. Okay, and did actually push up to the 6125, 6130 level earlier on, until it reversed obviously towards the close. Given the fact that the Shanghai was obviously under pressure. So interesting scenario, and I'll certainly discuss and elaborate as to the reason why. We had AB Foods this morning that actually was negative. If I bring up the actual FTSE heat map, you can see here Associated British Foods were down 0.9%. Okay, the shiner was Glencore. Okay, and the miners, obviously with news regards to its debt reduction, etc. That certainly sent the Glencore shares up by 13%. That explains the reason why the FTSE 100 was very bullish earlier on. As you can see, the FTSE 100 was up to 6125 earlier on before it reversed and gave back its gains. Okay, so I'll certainly elaborate upon that as well. So we have the Chinese markets down, although they're up at one time. Obviously failed to hold the gains. So again, slightly bearish slant there. Hence the reason why the FTSE obviously gave up its gains, and the European markets too. Okay, so we had weaker German data and we had weaker European data as well with regards to Sentex, or so consumer sentiment, if I can recollect correctly. We did have a report with regards to the UK output being cut in half due to China and the slowing growth globally. So that certainly was an argument as well. We did have oil push up initially based on the Saudi and Russian news. And obviously it has given back its gains now. I mean, we did push up to a point of, if I just bring up the chart as well, just to elaborate and explain with regards to crude oil. We did actually hit a high overnight at around the 47 level. And as you can see now, we're back down to the $44 region. and we are coming back into support on the chart of oil at present. Okay, so we had the Asian news. Obviously, the Nikkei was bullish, but China was bearish. So again, how do we interpret that? Chinese markets being down to a large extent were already factored in, given the fact that we had the US markets flushed as well. So overall, good strength due to Glencore. And that single-handedly kept the FTSE afloat until obviously towards the end. And the markets obviously flushed down to as low as 6060 before rallying back to the 6080 region. Okay, now that's the fundamentals in terms of the market flow. So as we know, the hawkish slant or interpretation of hawkish slant on a Friday post jobs report certainly did hurt the FTSE, and that obviously put a negative certainly put a negative slant on the FTSE, but that was offset by the stronger movement on Glencore and the miners. Okay, so that certainly offset that weakness, so that was impressive. So whenever you see the overriding fundamentals as bearish and yet the index shows strength, that's a bullish sign. Okay, and that certainly is indicative of a potential reversal and a potential bottom, hence the reason why at this current juncture I am actually long the FTSE, and I'll explain why, but certainly showing immense strength from my perspective, especially given the fact that the Glencore news has helped the miners potentially put in a bottom, and I'll discuss the reason why. Okay, so I've explained the fundamentals. Yes, we have concerns over China. So yes, China was up quite substantially at one time before it gave up its gains, although the central bankers are certainly weighing in now and stating that China has potentially put in a bottom. Okay, so again, that's a good sign if central bankers are trying to support the markets up. You don't want to fight the central bank. Okay, that's certainly an argument you don't, certainly a trade that you don't want to take against them. Then we had Mr. Draghi, obviously very dovish last week, hence the reason why the euro has obviously been under pressure ever since, and that's obviously positive for EU equities. Now, the negative aspect for EU equities is the fact that basically the negative impact is if the Fed delays its taper. Now, given the fact that Mr. Lacker's comments stated otherwise, therefore one would presume that they are certainly on course, and the euro will certainly remain under pressure. It will be a double whammy, i.e. Mr. Draghi dovish plus the Fed hawkish, and that obviously will send the euro lower. If that sends the euro lower, then obviously that's bullish for EU equities. Now, the other side of the equation is the fact that if Mr. Lacker is right in his expectation of a rate rise coming forth very soon, then obviously that's very bearish for the FTSE 100, and it's bearish for commodities as well. But I'm tilting towards the fact that we are not going to see a rate cut, and therefore that is negative for the dollar, because the dollar index, if I bring up the chart of the dollar index, here we go. Dollar index obviously, as you can see, is into resistance, and that will remain so. So the dollar index is certainly into resistance on a daily chart, regardless of what the NFP data on Friday brought forth, given the fact that we had weaker jobs but stronger wage growth and lower unemployment levels certainly dropped in terms of a percentage. Still, the market had, one could argue, it already forecasted or priced in a potential hike in wages, and therefore obviously expecting inflation down the line. But having said that, given the fact that commodities are obviously down today or towards the session due to the weaker growth, and we had weak growth out of the Chinese GDP will certainly reduce to 7.3%, and obviously German data certainly came out weaker as well. So there's arguments on both sides. That's why the volatility in this market right now is absolutely insane from my understanding and my interpretation. So my argument is that the dollar index certainly is coming into resistance. I don't expect a rate hike, although I could be proven wrong, and therefore it is interpreted as being bullish for the Aussie and the Kiwi. And that's one of the reasons why I'm actually long the Aussie at this current juncture, given the fact that we had stronger data as well out today. So this is basically what we're expecting. So if I presume that the dollar is into resistance, therefore I then expect the commodities to be into support. Now, this is certainly an argument that is supported, given the fact that I can see an inverted head and shoulders pattern on copper, as you can see there. Okay, and that's obviously confirmed with the dollar index being into resistance. And then we had the actual price of oil. I just bring up a daily chart of the price of oil. As you can see here, now we're consolidating for a higher low and looking to potentially put in a reversal on the chart of oil. If I bring up a chart of the gold price, slightly zoom out, as you can see here, daily chart also has an inverted head and shoulders formation. So again, that's confirming, the dollar index is confirming that the commodities are putting in a potential pivot low for a reversal, and that's obviously interpreted as being bullish for the FTSE 100. Now if I go to the actual index itself, if I go to a weekly chart of the Nasdaq, sorry, should I say the FTSE 100, you can see that bottoming tail certainly is in, previous resistance equals support, and we are in that zone. Okay, so this crucial zone, and given the fact that with the topping tail certainly is in as well. The daily chart of the actual FTSE 100, you are holding or attempting to hold that pivot low there around the 6028 level and 6030 levels. So although you do have a bearish continuation pattern, so one needs to be wary with regards to that. The 60-minute chart is showing a bull flag. As you can see, consolidation in the upper 25 to 50%, and I'm looking for a potential thrust higher. The 10-minute chart on the FTSE 100 is showing me an inverted head and shoulders formation. As long as we remain above the 75% fib, you are looking at a higher low. If you have a higher low, then obviously we're looking at for the retest of 6120 and potentially higher as well. So therefore, looking for a potential move higher on the FTSE 100 itself. The volatility index, again on the daily chart, you can clearly see we are into resistance. 60-minute chart, you can see we're making a lower high as opposed to the FTSE making a higher low. Okay, and therefore the FTSE 100 would be into support based on that. Now again, you have the same FTSE all share bearish continuation pattern, but then one would argue on the 60-minute you're holding that base and you are making a higher low, and also you have a bull flag formation, given the fact that the Glencore news was being interpreted as being bullish. Now the FTSE Europe 100, that's so another index I generally tend to observe for the FTSE, and as you can see again, we're making a higher low. The market is not making lower lows and lower highs, and therefore reversal is underway from my perspective. The actual FTSE Europe is into key and crucial support, especially after putting in that potential bottoming tail, and we are building a base at this region, and therefore FTSE 100 certainly looking to propel higher. Now you do have the bearish continuation pattern on the FTSE 250, so one needs to be cautious. But having said that, again, the market has not made lower lows and lower highs. If anything, it's making a higher low, and obviously made a higher high, and then are now looking to potentially put in a base at this juncture. So again, all the indices or all the indexes generally are pointing higher. The only slightly negative sign is the fact that your sterling certainly has potentially caught a bid or is into potential support, and that is a double-edged sword with regards to whether sterling will cause a FTSE decline. Again, that will be debatable. So again, we'll have to discuss that in another video. But at this current juncture, we are all eyes on the FTSE 100 10-minute inverted head and shoulders. If we do have, I mean, one could argue it's a weak head and shoulders, inverted head and shoulders pattern. From my perspective, the more important thing is the higher low. If we can hold that higher low, the FTSE 100 at above the 75% resistance, 75% support, then you are looking for a potential move and thrust higher on the FTSE itself. If that obviously fails, then the next bastion of support is the 6040, and then you're looking at 6020 below. Below there, you are looking at 6980, and the bullish argument certainly is quashed. Okay, folks. So be sure to visit CFDs.com, www.cfds.com, and the specialist spread betting and CFD brokerage, and also visit the website for the free services such as www.cfds.education as well. Okay, that's a wrap. Goodbye now.